Welcome to Three Questions, brought to you by the Washington State Democratic 18th Legislative District. I'm your host, Wil Fuentes. There's a lot of dumb shit rolling down from Washington, D.C., which impacts Washington State and impacts Clark County. On this show, we bring folks with the knowledge on the issues that are impacting us today. Our guest today is Michele Copeland, who happens to be a mortgage professional and will share some insights on the affordability crisis in Clark County and across this country. Michele, welcome to the show. It's great having you today. Michele, because of your profession, I have a few questions to ask you. Question number one, is the American dream dead? Is it dead? Has it been buried?
Has it been buried?
Yeah.
No. So if we're talking about the American dream being home ownership, it's not dead, but for some people, it looks like it's going to take a little bit longer to achieve. Some data just came out, and it's been all over the news, that the average homeowner, first-time home buyer, is about 40 years old.
Right.
Yeah. And just a few years ago, it was 30. So what we're looking at now is just delaying that for a number of reasons.
Yeah. And what are the consequences when the average homeowner is 40 years old and just getting into the housing market now? I'm curious.
Well, in my opinion, I think there are a few consequences. The first one is people use home buying as a way to create generational wealth.
Right.
So if you're buying a home at 40, it's taking you that much longer to build equity in the home that you're buying.
Right.
So that's an issue. I see another issue is that a lot of people who are 40 have children, and the data shows that when children are raised in a situation where they aren't in stable housing, maybe they've moved a lot, or they're living in apartments, or they're not able to afford to live in a good area. I hate to say a good area, but an area that maybe doesn't have the best housing opportunities or schools, that can affect the outcome of kids in terms of graduating from high school,
Right.
going to college, crime, safety.
Yeah, children and families need stability to be able
absolutely.
to thrive, right?
Yeah.
In 2004, 69% of Americans owned a home. That number in 2025 is down to 64%, right? So a 5 percentage point difference, which is pretty significant if you really think about it. Now, the current administration is proposing a 50-year mortgage, so more folks qualify for a home. If the average home buyer is 40 years old, they'll be 90 when they finish paying this home off. Tell me what the intended consequences are as a result of a 50-year mortgage, if it gets approved.
Yeah, we'll see if that gets approved.
Right.
That puts there's a lot of issues with guidelines,
Right.
and with lenders who might have issues with that. So the disadvantage, obviously, is that it makes people, in my opinion, indentured servants.
Right.
So they never actually live in a home that's paid for, and they're making a payment for the rest of their lives. It also puts off the equity that they establish on their home, because, as we all know, when you're in a 30-year mortgage, you're actually not paying down the principal of your loan for quite a few years.
Right.
And then you're starting to build even more equity, and that's not even just based on the value of the home going up. When the loan is amortized over 50 years, it's going to take that much longer to make those principal payments, principal and interest payments, before you're actually lowering the balance of your loan.
Yeah.
So it's going to delay the equity that you have.
Yeah.
The only advantage that I can think of for a 50-year mortgage would be, because it's amortized over 50 years, it does lower the principal and interest payment, and it will make it so more people may qualify for a home.
Right.
And then if they build equity over time, most people carry a mortgage for 7 to 10 years, and they either refinance or they move on to another home. They can use whatever equity they have, if they have equity, to move forward into another house. However, because they're not paying down the principal during that first 7 to 10 years, unless they're making extra payments, what can happen is they're really relying on the market to grow. So there's a equity between their home loan and the value of the home, the appraised value once they sell it. Now, that can be really dangerous in a downturn. So people could
Right.
easily become underwater in their mortgage
Which we
and
saw
not have
that,
equity.
and we saw that in 2008, correct?
Exactly. Yeah.
So you make a very valid point, Michelle, that half the life of a mortgage, if a 40-year takes out a 50-year mortgage, half the time they're barely touching their equity. They'd be retired and still paying off their mortgage. Mm-hmm. Yeah, I don't know that's a great benefit to the American people. Yes, we have to address the affordability issue. I don't know if that's the best option, though.
I agree.
Yeah.
And this is just my opinion. I think that is just putting a Band-Aid on a dam. I think that there are a lot of issues to be able to address affordability of buying a home.
Yeah.
And it's not necessarily extending the amount of time that they pay on their mortgage.
Yeah, I love that. A Band-Aid on a dam. A Band-Aid on a dam. Please. Thank you. Question number 2. Michelle, we were just talking about housing affordability and folks being able to purchase a home so that they can build equity and live off of that in their retirement years, along with Social Security and their 401k plan. Right? But I remember reading recently that the average Generation Xer has in a 401k plan about $270,000. Now that sounds like a lot, but if you put it in perspective, that's probably about 4 years worth of salary, right? So what's going to happen with folks who aren't building enough equity or able to get into a home, don't have a solid 401k plan? Mm-hmm. Social Security might disappear. We don't know. Mm-hmm. So what are your thoughts about that?
Well, I'm not a financial advisor,
Mm-hmm.
but I can tell you what I see. And honestly, that $271,000 sounds pretty high to me,
Mm-hmm.
because the average of what I see are people who have maybe less than $50,000 at least.
Wow.
In their 401k. Not everyone has a 401k, and not everyone has an IRA. That's what's interesting about the Trump administration talking so much about how the stock market is doing so well. The stock market is doing well, which is
For
great.
who?
Which is great for wealthy Americans, maybe the top 10%, but the bottom 90% who doesn't have a 401k or an individual retirement account, they are depending on the equity on their home, and they are depending on Social Security for retirement. How are you going to invest in the stock market if you have a $3,000 to $4,000 house payment? Mm-hmm. You don't have any money left over to be able to save, right? Mm-hmm. So, I personally don't believe that the stock market is indicative or to what is actually happening to the average American in the economy.
Yeah. Okay. So folks, just to be clear, the stock market is not a clear indicator of the economy's overall health, right? And neither is Donald Trump's rhetoric on affordability, right? He has no clue what the average American is struggling with. He has no clue what the average American is paying for rent. So in my opinion, everything that he's saying about affordability is bullshit. I mean, would you agree?
Yeah, I absolutely agree. Yeah, I don't think he has an understanding of where people are at and how they're struggling and the debt that they're in. We have the highest debt right now in terms of credit cards, student loan debt, than we've seen in previous years. And with inflation increasing and the price of goods going up, it's not a good situation for people right now.
None of this of what the current administration understands, right?
Right.
I can guarantee you Donald Trump has no idea what the actual cost of gas is, because he keeps on talking about that it's $2 on average. That's absolutely not true.
He's never pumped gas.
He's never pumped gas, yeah. Never.
If he has, I would love to see a picture of it.
I would too. I don't think there is one out there. Yeah, maybe an AI-generated picture. But thank you, Michelle. All right, question number 3. Michelle, inflation has been rampant the last few years. Everything's up, right? From the cost of gas to the cost of housing to the cost of food, going out for dinner. Everything's just insanely high. So I'm curious how, if you can address, the cost of everything going up. Also, can you answer this question for me? Are there some programs out there for first-time home buyers, some incentives, some programs that can help them get into a home now.
Yes, absolutely. So there are local programs within different counties and cities. One of the programs that's widely used is with the Washington State Housing Finance Commission. It's often referred to as the Washington Bond. And that program or that agency has several programs where people, called a soft or a silent second. So people will have their first mortgage and then they will borrow money from the Washington State Housing Finance Commission to cover their down payment and oftentimes closing costs. A lot of those loans are interest free. Some of them are what's called simple interest, where they pay just a small amount every year. But they don't make payments. They're not paying that back until they either sell the home or they refinance or they reach the end of their 30-year term on their first mortgage. So that will help them with the down payment that they need. There's also programs for lower to middle income people through Fannie Mae and Freddie Mac, which is the agencies that buy conventional loans, where they may only have to put 3% down.
Right.
It depends on their income. There's government loans like FHA that requires a 3.5% down payment. And then, quite honestly, lenders can also work with the borrower to get some of the costs reduced, and that would be in terms of like mortgage insurance, for example. There's options of doing what's called a split mortgage insurance premium, where maybe they pay more in their closing costs, but then their mortgage insurance is cut in half on a monthly basis. The seller can also, or the seller can contribute to buying the rate down. It's called discount points. And what that means is there's something called a par rate, meaning, let's say, for example, the par rate is 6.75%. That means that the buyer isn't having to pay anything for that rate, that they just get that rate from the lender. Any rate below 6.75%, they're buying it's what's called discount points. The seller can contribute to paying that, so that will help lower their payment as well. So there's absolutely help out there for people who would like it and who qualify for it.
And that's absolutely needed. But going back to my original question, Americans are struggling, right? Low income and middle income Americans are struggling for their basic needs, to afford their basic needs. What's causing all this? What's causing this shitstorm?
Oh boy, there's a lot causing it.
Tell me a little bit.
You know, the price of homes has gone up considerably, and with the rise of interest rates, that increased it as well. COVID, which was a worldwide, and this happened throughout the entire country and the world, whether you're Republican or Democrat. It forced prices to go up. People started buying homes. There wasn't enough inventory, meaning there wasn't enough homes on the market. There was an influx of buyers, and it just created this storm of rising home prices. That's another reason why we don't want to see rates go too low, because that could happen again, because it'll bring more buyers to the market, and we just don't have the housing.
So that's on the housing side. What about the daily cost of living? As I mentioned earlier, gas, groceries, clothes, as a result of the tariffs, right? So what else is causing this problem?
So it's policy and it's deregulation, in my opinion. There is a increase in pretty much everything, and what I see in my job are a lot of people who have student loan debt that is preventing them from being able to qualify for a home because of the payments they have to make. We've got to figure out how to help people get out of that. But people need, oftentimes, to go to school, and they establish student loans because they need to be able to improve their lives and have higher wages. So it's sort of a catch-22. So I think we need to help people with that. Auto loans. The tariffs have increased the average new purchase price to $50,000.
That's unbelievable.
That is an unbelievable price for a car.
$50,000.
And we're talking about payments I've seen up to $1,800 a month, depending on the price of the car.
Oh, wow.
Yeah, that's not an
on
exaggeration.
A Ford Fiesta.
No. But honestly, I rarely see a car payment that is under $600 a month.
Wow.
And that prevents a lot of people from being able to buy a home. You have to have a car. You have to have reliable transportation. So that is preventing people from buying homes. The cost, the affordability of car insurance or homeowners insurance, that's all gone up. food prices. The tariffs have just really done a lot to increase food prices. So it's not just about being able to afford to make that house payment or that rent payment, but you have all these other things you have to pay as well.
Yeah.
So.
The Trump administration, I read last night, they are talking about removing tariffs on food. They caused a problem. Now they're fixing a problem that they caused.
Yes.
Isn't that very typical of the Trump administration?
I think it is.
Yeah,
I think it is.
Let's fuck shit up and then let's fix it.
Yeah, exactly.
But anyways, Michelle, thank you so much. I really appreciate you being here.
Thank you.
You're giving us a little bit of hope, with some of your responses and how to address the affordability crisis with housing. I hope we can fix it sooner than later
I
because
hope so
Americans
too.
are struggling. They're struggling with rent, with the cost of just basic living expenses, and wages aren't going up, right? So that's another big issue. So, but thank you so much for being here today.
Thank
and
you.
We look forward to hopefully being able to afford a home soon.
I hope so
Yeah.
too. Thanks.
Thank you. And that's our show for today. If there's anybody you'd like to have on the show, let us know in the comments below. Don't forget to subscribe and hit the notification bell. And we'll see you next time.